Welcome back to Join the Dots, and I say welcome back because I left you last evening with the prospect of us discussing what to do in the event we see this crisis that I have 60%, in my view, there's a 60% chance of a September-October crisis. Okay, so what do we do? Well, let's have a look. No debt is obviously a great place to be, or with debt really under control. Okay. Eurodollar University, I'll give you a first link. And just watch the first few minutes. You don't have to watch the whole thing. Okay, just watch the first few minutes. Just catch the tone. They're talking about a possibility of a 50% cut now because Waller wants a 50 basis point cut. I think if they do, as I said yesterday, it'll be a total crisis. A total crisis. And everyone will know it. And the jobs figures will confirm it, and then everything that comes out of the data machine will churn and churn and churn, crisis, and there'll be no stopping it. Okay, everyone knows now that stagflation is the most likely outcome, i.e. high inflation, low growth. We know that. The jobs numbers are terrible, jobs, they're all going. Okay, there are no jobs over the last 6 months. The stats will be massaged again, no doubt, but there's no jobs. Okay, so stagflation is very likely. So let's go on to what we can do positively, all right? And the second link and the third link I'll give you are from our friend Clive Thomson, who normally appears on Manico 64. And Clive has done a very old-fashioned, research-based analysis of gold and silver miners, okay? And I'll link those both below. Remember, on the last page of this presentation, you will get the links to the YouTube sites and you can just touch them and you're in. Okay, but these are two very good presentations by Clive Thomson. They're a standard type review, an old-fashioned textbook review of the reasons why he selects or how he selects his gold and silver miners. And I think it's very reasonable to watch. All right, now the big thing about silver, and I've mentioned silver many times, and I picked this up mainly from Greg Mannarino, who bites a silver dollar every time he talks about it and says silver is his favourite asset of all time. I agree with him. It is my favourite asset of all time because I think the opportunities there are the greatest of all time. Just the way I see it. Okay, so good analysis. The difference between silver and gold is that most people or most miners who mine gold are gold miners. Well, that's obvious, isn't it? But most people who mine silver are not silver miners. Silver is a byproduct of mining other products. So you might have a copper miner, you might have a gold miner. They find silver as well, and that's where the silver comes from. And the silver isn't a lot. We're talking 1 billion ounces a year. Now, if you go back in history, since 2016, the supply of silver is down 65 million ounces a year. But the demand, and think EVs, think solar, think missiles, think electronics generally, the demand is up 150 million ounces. That's a 20%, more than 20% swing in supply-demand metrics. Okay? It's a huge number. So what you need to do here is regard silver as a very logical asset to have in your both defensive and offensive portfolio. It's defensive because you know that demand is outweighing supply, and that will only get worse in a crisis. At the moment, I think it's 200 million ounces each year, so 20% of the market is used for coins and investments. Can you imagine when the public get thrown out of equities, when that 54% equity exposure, when all that margin exposure, when all those options go wrong? Can you imagine how much money is going to move into silver? Only 200 million ounces, 20% of the supply chain goes to coins and investments. Can you imagine China? Can you imagine India? Because these are areas that really, really believe in gold and silver. Can you imagine how much money is going to go there? I said this in a presentation the other day, didn't I? I said in China's property collapse, which is 5 years on now, and their economic collapse, and their 30-year government bond yield is 2%. What are the public going to buy? Gold and silver. What have the government told the public to buy? gold. I have a view on that. I think it's because they will have the opportunity to confiscate it at some point. Yes, I do. Yes, I do. So, US announcing silver as a strategic metal. The US used to hold 4 billion ounces. 4 years global supply of silver. Now it has very little. We don't know the exact number, but it's hardly anything. Okay. So what are we going to see? Well, I've talked to you before about expansion in price earnings multiples based on a company's prospects and people's perception of their prospects. You think about it. Okay, so if we look at Nvidia today, the price earnings is 49.5, despite the fact it's the biggest company on the planet, and it's expanded its value by how much? It's still 49.5. Tesla, I'll do Amazon first. Amazon, 35 times. 35 times. It's got to grow into that. 35 times PE. Tesla, 193.5 times. And I kid you not. I kid you not. Yes, there's a lot of hidden value in Tesla, in the battery technology and everything. I understand that. But 193.5 times earnings? Really? And what is the PEs of my favourite metal shares? Pan American Silver's at 23.5. Agnico's at 24. But if the public come in for these shares, which are tiny, they're not even 0.5% of the market. The whole mining industry, as Rick Rule tells us, the entire mining industry is less than the value of Nvidia or Microsoft or Amazon. Can you imagine it? What an opportunity. What an opportunity for PE expansion. And not only will they have PE expansion, but as the underlying metal goes up, and I'm recording this on Wednesday, or this is coming out to you on Wednesday, I'm recording this Monday morning, and we've just seen silver go through 40 and quite substantially. Now, it might go back down again. Normally they take 3 times to go through a big figure. But it didn't stop when it went through. It got up to 40.9 this morning, and it will keep going, in my view. I see 48 to 50. Normally it stops short of the big figure. So I see 48 quite quickly. That's a 20% growth of the underlying metal price. Then think the operational leverage that I've talked about to you before. There's no extra cost for a miner, there's just bottom line profit. And then you have PE expansion. It can expand into 40, 50, 193 times if the public come for it seriously, which they will. Because there won't be many options, will there? There won't be many options for people. And what will they see? They'll see the silver price going up, the gold price going up. They'll see stagflation, they'll see jobs going, they'll see house prices falling, they'll see share prices falling. And they'll want safety. And the people in India and China, the 2 most populous nations on this planet, have a history of understanding silver and gold are real money. Real money. Not this fake, counterfeit, fiat, whatever you want to call it. And remember, when I talk about these shares and how they could fall, remember that the MIT study that I linked to you the other week, and I'll link it again, just so you've got it. Okay, the MIT study said 95% of AI-related will fail. Of course they will. It's like .com. How many companies survived .com? 5 or 6 massive companies, the Amazons, the Microsofts, the Facebooks, the Metas now. Yes, they survived it. But what about all those that died? What about all those companies that people invested in? Okay, they died. They became worth nothing. AI will go the same way. And then obviously the big boys will consolidate by picking up, if they're cash rich, they will survive it. And then they'll pick up all the data centers from the ones who can't afford them anymore and haven't got access to liquidity and can't borrow and have foreclosures, bankruptcies, and they'll come in and they'll pick up all these data centers very cheaply, and then they'll go off on a lovely run because they're picking up good assets, good quality assets very cheaply. It's the way it works. It's the way it worked in .com. Okay? So remember, 54% of equities are owned by the public. They have $1 trillion of margin exposure, and they have the largest option exposure ever. The public are all in equities. it's usually the wrong place to be. When the public are all in, you want to get out. Okay? And as Rick Rule always says, the time to be buying is when the public aren't buying because they're not seeing it. And what we're seeing here with the price, with the earnings ratios on the miners, on the top quality, top miners, there's going to be lots of speculative ones where the public again will be pushed into these speculative ones. That's why I've sent you the link from Clive Thomson. One on silver miners, one on gold miners. Please watch it. Just get the basics, the fundamentals of how to value an opportunity. Because you are going to be bombarded by laptop warriors, salesmen, people in Thai bucket shops, ringing you up, screaming, buy this gold share, buy this silver share. And you'll be buying the shares in a company that's digging a hole and hoping, or maybe just digging a hole. Okay, look for quality, please. Bird in the hand, we've got the opportunity, I've talked about it many times. The opportunity is right in front of your face. And the disopportunity is again in front of your face. If you can recognise those two positions, you can be in a very, very safe place, come what may. Okay, thank you very much, and we'll be back tomorrow. Please, please subscribe, please. 70% of people are not subscribing, they're watching it. I'm getting lovely comments. I'm not getting any stupid comments, which is wonderful, because it means that we haven't got that sort of person watching us. But please subscribe so we can get these videos out to more and more people. Thank you very much.